Coming out tonight. I'm sure more people are going to start trickling in, but some of my colleagues had just handed out the survey. At the end, can you please just fill those out and just hand it to either myself or one of the other staff within Common Sense, and we'll take care of that. And now I present to you Miss Radha and Kyle?
Yep.
And Kyle. So I'm going to give the floor to them. Thank you once again for coming out tonight.
Thank you. Hi everybody, thanks so much for attending tonight. So my name is Radha Venkatesan and this is my colleague Kyle Harlow. The two of us work in the Global Mobility Tax Group in PWC. And we're here today just to talk about some tax aspects that you may be interested in. So we're going to pull up the agenda. Just some disclosure here. So we're going to be talking about various aspects of the U.S. taxation. We're only going to be covering the U.S. tax. So if you have questions on any other country taxation, we may have to ask you to look into the rules for that specific country. So we're going to be talking about residency status. I'll go into the details around that. Form 1040-NR. So for anybody that's not familiar with that, it's the U.S. non-resident tax form. Form 8843, that's basically for students, if you have to disclose certain information about yourselves. Identification numbers, so, in case any of you don't have a U.S. Social Security number, there's another number that you can actually obtain. It's called ITIN, Individual Taxpayer Identification Number, so we'll go into that. What are some of the deductions and income items you may have to report on your U.S. returns? Some tax treaties that may apply for you to be able to exclude certain types of income. And we're going to give references to some publications that you can use if you have specific questions that we may not be able to cover today in our session. We do have some time towards the end to kind of go through any questions you may have. So please feel free to save them. Okay, so in terms of tax residency, in the U.S., if you are a U.S. resident or a citizen, then you are going to be taxed on worldwide income. So what I mean by that is, regardless of where you're working, any other country, you have to report all your income. And that's income from compensation, so working for employers or even the university, or any other kind of personal income that you may receive, like interest income, dividend income, any capital gains, anything along those lines. So as a citizen or a resident, you're subject to worldwide taxation in the U.S. If you are married, you can file as married filing joint for under this option. So there's various kind of filing statuses available on the U.S. returns. There's single, there's head of household, there's married filing joint, married filing separate. So there's various options available. And then in terms of deductions, so deductions are basically something that reduces your income that's going to be subject to tax, right? So let's say you have income of $50,000. Against that, you can take certain deductions. That will reduce the taxable income. And then on that taxable income, you apply the U.S. tax rates to come up with your final tax number. So in terms of the deductions, there's actually a couple of options available. One is the standard deduction. So that's just an amount based on your filing status that you can claim every year. And those amounts go up slightly every year, for inflation purposes. Or you can take itemized deductions. So typically you take the larger of the two, so whichever is going to give you more of a benefit. So under itemized deductions, you can take, things like if you're paying property taxes, if you're, paying charitable contributions, anything like that. On top of deductions, you can also claim exemptions. So if you're filing a return for yourself, you count as one exemption. If you have a spouse, if you have children that you're reporting, then each one of them will claim an exemption. So for 2015, the exemption amount is $4,000 per exemption. Generally, there's no kind of treaty exemption. So here, when we talk about treaty, we're talking about income tax treaty. So sometimes you can refer to the treaties to see if there's any way you can kind of exempt or lower the income that's being subject to tax in the U.S. So if you're a U.S. citizen or a resident, typically there's very little provisions available. You have to report the worldwide income. Then there's another option. So if you're not a resident or a citizen, then typically you would be considered a non-resident. A non-resident alien, again, alien is purely like a tax term. So under a non-resident, you're only going to be taxed on anything that is considered effectively connected with the US. So meaning anything that is purely related to income that you earn here in the US. Now in terms of deductions, unlike the resident, it's limited under a non-resident. You know, you cannot claim standard deduction. Usually you can only take itemized. And even under the itemized deductions, there's only certain types of deductions you can claim. Under this option, there are treaty benefits that are available. So income tax treaty, you can look to the country that you're coming from to see if there's any provisions in there where you can reduce, you know, certain types of income that you're reporting on the return. But of course, you have to meet various criteria to be able to qualify for that. So we went through this a little bit. So you're taxed on worldwide income. So for non-US citizens, there's actually several tests that you use to determine what filing status you claim on your US return. One is called the green card. So in case you're not aware of it, it's a permanent residency, right? Status. That's what a green card is. So once you obtain a green card, you're pretty much going to be taxed the same as a US citizen. So you have to report your worldwide income, even if you're living elsewhere, or even let's say you're in the US, you work here or you study here for a while, and then you somehow get your green card, and then you decide to go back to your home country. Then until you potentially give up the green card, so that's the last point here, until you relinquish it, you're going to be taxed on your worldwide income. Now, in the event that you do choose to relinquish your green card, the form I-407 needs to be filed, and from the date that you relinquish it, you'll no longer be considered a US resident for tax purposes. Okay? So that's one of the tests. So the second test is?
So the second test is the substantial presence test. And so if you meet this test, you are also treated as a US tax resident rather than a non-resident. And there's two parts of this test. So the first part is that you must be physically present in the US for at least 31 days during the calendar year. And then the second part is if you spend more than 183 days in the US during the period that includes the current year and the 2 prior years, you would also be considered a US tax resident. And the way that it's calculated is, as it says up there, each day in the current year counts as 1 day. So if you're here for 140 days during this year, that counts as 140 for this test. And then when you look back 1 year, each day is only a third of a day. So if you were present in the US last year for only 30 days, for this test, that would only be considered 10 days. And then when you look back 2 years, it's only 1/6 of a day. So if you were present for 30 days again 2 years ago, that would only be 5 days for this test. And then you add up the total of these days, so every day from the current year and then the 2 prior years that you calculated. And if it's greater than 100, if it's 183 or greater, then you are treated as a US tax resident for tax purposes.
And just to add something here, in case you're not familiar with it, the US tax year runs from January 1st till December 31st. Now I know some countries have different tax years. So for US purposes, we're purely talking about even the 183 days. We're looking at, January 1st to December 31st.
So for this test, there is an exemption for students under an F visa. So certain days from this test can be exempt. So the general rule is for your first 5 calendar years that you spend in the US under an F visa, those days are exempt from the substantial presence test. So even if you are in the US for 365 days during the year, if it's your first year here under an F visa, you don't meet the substantial presence test. And then you would be treated as a US non-resident instead of a resident. And this test also for teachers or trainees under a J or Q visa, you can be exempt for the first 2 years or your first 2 years under this test. However, you have to look to your prior years. If you were here as a student in the past, you have to look back 6 years to see if you spent any time as a student, and those years count towards the 2 years that you can claim when you're holding a J or a Q visa. So if you meet this test, so if you're a student under an F visa and you want to exempt your days from the substantial presence test, you would file the Form 8843 that we mentioned before. And on this form, you're able to list out the days you spent here, and you also list them out as being exempt from the substantial presence test. And we'll go over this form in a little more detail in a little bit. Also, so that was for federal purposes. However, in the U.S., you also are taxed depending on which state you live or potentially work in. And so the general rule is for D.C. and Virginia, if you are working in either of those states for more than 183 days during the year, you are considered a resident. And for Maryland, if it's more than 6 months. So if you work in D.C. for the entire year, you would be considered a D.C. resident, and you would owe D.C. taxes. And certain states, so D.C., Maryland, Virginia, Pennsylvania, they have an agreement together. So the way the agreement works is whatever state that you are a resident of, so where you live, generally has the right to tax you. So if you live in Maryland, but you work in D.C., you would actually have a Maryland tax return due rather than a D.C. tax return. So generally you pay taxes in the state. If you live in Maryland, D.C., Virginia, where they have this agreement, you pay taxes in the state where you're living. So, or if you live in D.C. and you work in Virginia, you would still pay D.C. taxes in this case.
And the employer may withhold in the state that you're working in, but when you file your the return for the state that you live in, you can take a credit. Okay, so we were talking about income tax. The next section I want to look at is in terms of social security taxes. So here in the US, you have the FICA system, which is essentially, it's made up of 2 taxes. It's made up of social security taxes as well as Medicare taxes. So social security tax is typically 6.2%, but it's capped off at a certain amount. So I think for this year it's about $118,000. So generally if you earn income above that limit, then you only pay 6.2% up until the $118,000. For Medicare, you typically tax at 1.45% and there is no cap on it. So whatever income you earn, you pay Medicare taxes on that. So if you're generally a student holding an F visa or even a J visa, you should not be subject to Social Security taxes. So either both the Social Security as well as the Medicare, especially for the first 5 years. Now, once the 5-year elapses, you will be most likely considered a resident, and at that point, all the rules that apply to a normal resident will start applying. But at least during the first 5 years, you should not be subject to the Social Security and Medicare taxes. Now, if for some reason, let's say you received a W-2, which is the US equivalent of like a compensation statement, or any other kind of compensation-related statement, if you received that either from the university or from any other sources where you're working, and you see that there has been Social Security and Medicare taxes withheld, see if you qualify under the first 5 years. If you're within that, then you probably have had taxes incorrectly withheld. So you can request for a refund of those Medicare and Social Security taxes. Usually if you catch it within the same calendar year that you've had the withholding, you can go back to your employer and request a refund. But let's say you only notice it after the calendar year has elapsed, then there's actually 2 forms, the 843 or the 8316, that you can file with IRS to request for those taxes to be refunded. Okay? So what we're looking at here is, in terms of, what may trigger a filing requirement. We talked about, yeah?
I had a question for the previous slide.
Sure.
So that's regarding the FICA taxes, right?
Mm-hmm.
I've had this problem from 2014.
Okay.
And I have filed both those forms twice actually, and
You still haven't received the refunds yet?
No, there's no way. IRS misplaced them. documents and I
Okay.
sent them again, and I don't know if it reached the right address.
Did you call them by any chance to
Yes.
find out what happened?
I did.
And did you refax it? A lot of times, I know they do have some cases where they do misplace the forms.
Yeah.
Did you provide like the support of like the passport and other details that they
Yes.
requested?
They listed, like in their letters, they had listed
Right.
all the documents they wanted, and I've sent them more than twice. And I don't know if the helplines are mostly for federal taxes, those, they're not able to help me.
Did you call the Social Security Administration by any chance as well?
No,
To
that's
see
what
if
I
they
was
can-
asking. I don't know which other way to follow up with them, because
IRS, I think of late, we've had a lot of issues with them as well. They've been issuing notices left and right for various things that they shouldn't be issuing. They've kind of been understaffed, to tell you the truth. So last year we had this issue where, you know, even us as tax practitioners, because we have a special line where we can get through quicker, even that, we've had to wait a long time, like an hour, to even get to someone to speak. So the only other option I can suggest is maybe try and call the Social Security Administration, see if they can assist in any way. That's the only thing that I can suggest.
do you know if there's any specific department for FICA taxes that I can write to? Or,
Social Security is where you would have to contact them.
okay.
They are the ones that look at the whole, you know, the whole FICA aspect of it. So you can ask them.
Okay.
That's your last resort. The other thing is, I guess, just keep following, keep following up with the IRS. Yeah, that's all I would suggest.
Like wait for more letters.
Yeah, did you get any letters from them at all?
After that, no, it's been more than 4 months since.
What did they actually say in the letter?
That they, so I was working for 6 months in that tax year,
Uh-huh.
and they weren't sure of my EAD card, and
Right.
the FICA taxes were deducted only for half of the year.
Okay.
And I sent them all the details. They asked for my W-2 and my
Mhm.
EAD card and
Right.
I-94 and some other documents. I sent everything in a letter describing the
Okay.
reasons and
Uh-huh.
everything, and I sent it in the envelope which they have. And
Right.
so I know it reached the right address,
Right.
and I haven't received any communication after that.
Okay.
And when I call all these numbers, they're mostly for federal income tax, and they
Okay.
just tell me keep calling on the same number, which is a recorded voice, telling me to call on this number. So it's,
Right.
I don't know where to go from here.
Okay, maybe at the end of the session, we can see if we can give you some other numbers.
Sure, yeah. Okay.
Or you can always call the Social Security Administration
Okay,
to try and get you help.
sure. Thank you.
Okay.
Sorry, I have just a quick question.
Yeah, sure.
So if your social security tax was withheld in 2015,
Uh-huh.
can you still request your employer to fund that, or would you have to file for it?
You'd probably have to file this form because the calendar year 2015 has elapsed already.
Yeah.
You can ask your employer, but considering now we're in March, most likely you'd have to file these two forms.
Okay, and if you're continuously being withheld tax on your biweekly pay statements for
Mhm.
this year, do you have to revise the W-4?
Yeah, you probably have to revise it, talk to your employer and tell them that this is the status you're in, and you know that you shouldn't have FICA taxes withheld, and they should hopefully be able to correct it now for your 2016. Yeah?
If you had two F1 visas, one is over, the other one is beginning now, does that count as the 5-year or 1 to 5 year thing, or is it like your F1 status together with both of the visas?
What do you mean? So you had F1 status for how long?
So I had F1 for undergrad, and then I have a different F1 for masters,
Okay.
and it's according to the university. So
Okay.
I'm wondering if they're both taken together, then I would be past the 5-year one, but if it's just for the masters, which
Okay.
is the second F1,
Uh-huh.
it would be like just 1 year. So do you know if they're taken together or?
I think it's together, so I think it's 5 total years under the F visa.
But then you've gone past that 5 years, is that right?
Then yes, I would have, yeah.
Okay.
Well, not yet, but yeah.
Okay, I know there are certain cases where there could be exceptions made, so you could still be considered, you know, exempt, even though you've gone past the 5 years. But I think there are certain rules around that, and you know, your education and your college, you know, has to tell you that you qualify for that exemption. But typically, if you go past the 5 years and you don't have anything special that's going to exempt you, then you're no longer going to be able to take that exemption. Okay? So under this situation, so what we're talking about here is just looking at what may trigger a filing requirement for U.S. purposes. So as I mentioned before, there's different filing statuses, right? So based on your filing status, there are different income thresholds which may trigger the tax return filing requirement. So for example, if you're filing as a single, then the gross income, right, has to exceed at least 10,300, and we're talking about 2015 here. So if you have compensation beyond this amount, then you may have to file a tax return. Now, if you're filing as married filing joint, if your income exceeds 20,600, then you may have a filing requirement. And again, this is for a U.S. citizen or a resident, so we're not looking at a non-resident here. Now, typically for a citizen or a resident, you would file the U.S. taxes on Form 1040 or 1040 EZ. Typically, EZ is used, it's similar to 1040. EZ is a much shorter form. Like for example, if you're not going to be, claiming any exemptions for dependents, then you would typically file a 1040 EZ. With 1040 form, you have a lot more schedules and, line items where you can enter details. And then in terms of the state, so for Virginia, under a resident return, it's Form 760. Each state has their own, tax form. So we haven't listed all the states here, so that's just one example. Schedule A is a schedule where we spoke about deductions, right? If you're itemizing deductions, so meaning you're claiming various items, rather than the standard deduction, you report it on Schedule A. There's a lot of other forms. I'm not going to go into all the details here. But this is, again, something that, if you have specific questions on, come and see us later. Oh, Kyle, go back, just one thing. So a couple of other things that I wanted to explain. If you have tuition and fees, you can claim some deductions for it, and there are certain forms that we've listed here. So 8863, that's for lifetime learning credits. You have actually two types of education credits that you can claim. One is the lifetime learning credit, the other one is the American Opportunity Credit. They're slightly different in the sense, under the American Opportunity Credit, you can only claim it for 4 years of your education, but the amount is like, I think, $2,500 per year that you can claim. Whereas under the lifetime learning credit, you can take it forever. If you're in college for like 6-7 years, you can claim that every year. But the amount of deduction is limited. It's only $2,000. And then if you have any kind of business expenses which your employer did not reimburse to you, again, you can claim a deduction for it, and you would report that on Form 2106. Okay. Now, if you're a non-resident, what do you file, and what typically, causes a filing requirement? So, if you're a non-resident, you would report the income on something called Form 1040 NR. NR is for non-resident. You only have to file this if you have income that exceeds your personal exemption threshold. So as I was mentioning before, each person that's reported on the return is counted as one exemption. So, and the exemption amount for 2015 is $4,000. So if you have income that exceeds $4,000, then you may have to file the Form 1040 NR. And provided that income is to do with U.S. source income, right? If you have any kind of interest income that's from U.S. banks, and that's the only income that you have, you do not have to file a tax return. Now, if you have any tax-free scholarships or fellowships, then you don't have to file a tax return. If there are taxable scholarships, then, depending on the thresholds, you may most likely have to file a tax return. Now, under the F and J visa, because like we went through the rules before, for the first 5 years if you're students, or if you're not students, 2 out of the 6 years, to be able to, tell the IRS you qualify under those rules, you have to file this form called the 8843. So that's basically, you're going to be reporting that you're here in the U.S. as a student, or, under a teacher, or, one of those statuses, and you just have to report some basic details. Now, if you are claiming some sort of like income tax treaty benefits, then you also have to file Form 8833, and you attach that to the 1040 10R. Now, if income tax was withheld, let's say on your W-2 or W-2 equivalent, but there was no kind of lower tax that's imposed, then you may have to file a return just to get the refund back. So let's say on income that you received, which was less than $4,000, you had some taxes withheld. We kind of went through it. If it's less than $4,000, you don't have to file a return, right? But because you had taxes withheld, in order for you to be able to get that money back as a refund, you'll have to file a tax return. Okay? So we're going to kind of, this is very small. You probably can't see all the details. This is what a Form 1040NR looks like. So up the top here, under the filing status, there's actually 6 different options that are available. Now, if you're married, you do not have a married filing joint option on the 1040NR. You can only file as other married non-resident alien, so which is under the box 5, right? If you're single, you have the single status, and then if you're from Canada or Mexico, there's certain filing statuses you qualify for. And then all of this goes through your different items. So at the top here, these are usually income items. So you have your wages, which you report on line 9, and then you have any interest, dividends, various other items. Down here, you have some of the deductions. So any kind of education expense, scholarships and fellowship grants, anything along those lines. This is just the first page of the form. There's another page to it. We haven't included it as part of the slides here today, but we can certainly help you with that at the end of the session. So the next thing is, as I mentioned before, if you're under the F or the J visa status, you have to file the Form 8843. Yep, sorry.
I had a question.
On the previous slide?
Yes.
Mm-hmm.
So in TurboTax, they do not have 1040 NR, am I correct?
I don't know, but I think Georgetown offers Glacier tax prep that will allow you to prepare a 1040 NR. So you can use that to prepare your 1040 NR if you need to.
Okay. So TurboTax is not an option to go for if you are a non-resident?
I don't think so, but I'm not 100% sure. But I know that Georgetown helps with that, and they can give you the tax prep service to do your 1040 NR
Okay.
to help you prepare it.
Thanks.
If a non-resident fills
Sorry.
1040.
What's that?
If a non-resident fills a 1040 form, sends it to IRS and gets the tax returned back,
Mm-hmm.
does that affect the person?
You don't want to file a 1040 because then what you're telling the IRS is that you're a resident.
Okay.
Because if you do that, then what's going to happen is, let's say this year, so let's say last year you filed 1040 and up. It can happen because if you're looking at people who are not students or who are not under these statuses, and let's say they come into the U.S. in 2014 and they come towards the end of 2014, they may not meet the 183-day test. So in that year, they may be treated as a non-resident. But next year, we know that they're going to be here for a full year, then they're going to be a resident. So in 2014, they may file as 1040 NR, and then in 2015, they're going to file as 1040. And then that tells the government, okay, this person is going to be a resident most likely going forward, until they probably go back. So if you file a 1040, you're just giving the IRS an indication that you're going to be taxed as a resident. And then they may be looking to other sources of income, which you may not have reported, and which may be exempt as a 1040 NR. So you just want to make sure you're filing the right form. I think there was a question back there. Yep.
Yeah, so I use GDP, the Glacier tax prep thing talking about, and even though my income was less than the threshold level, I was still asked to file an 1040 NR,
Okay.
and I was wondering, how does it work? Like, do I have to file it, and do I have to file anything beyond these 3 forms?
Did you have taxes withheld?
Yeah, I did.
Maybe
But
that's
you just said that if I have taxes withheld, I just need to file 8843, not 1040 NR.
1040 NR. You still have to file because if you're below that exemption and you
Yeah.
shouldn't have been subject to tax,
Yeah.
but you have taxes withheld, then to get the tax back, you'd have to file a 1040 NR. Because what you're saying is your income was below the threshold, but because you had taxes withheld, you need to get that back as a refund. So you'd have to file it.
So you file the 1040 NR, and you also file the 8843 with it in that
Yes.
case.
Okay.
Because the
I haven't
8840,
filed anything yet. I was just-
right?
Yeah.
The 8843, you're filing with it because you're letting the IRS know you have this special, classification. If you didn't file that, then the IRS is going to be like, why are you trying to get refunds back, right? Yeah. Is there another question here somewhere?
Yeah,
Yeah.
I came here to Georgetown in September of last year,
Okay,
but I started working in January of this year.
okay,
But then they started to tax me.
okay.
So what do I have to do so that I don't get taxed?
So you may have to go back to the university and talk to them about, have you given them all the details? As to,
I
you know,
talked to my employer, and then they told me to fill out one of those forms and
Mhm.
just send it to an office, and they told me that was. I mean, no one really knows what to do with me because.
Okay, what status, what visa status?
I'm under. I know no one knows, and they just send you everywhere. And then,
Right.
I'm under an F1 visa.
F1?
Yeah.
Yeah, typically you should not be subject to tax.
And where do I send the form? I already have the form filled out. So.
What form are you talking about?
I think the 1040 NR. I think. For
1040 and up?
non-residents, yeah.
But what was your income? Maybe your
I didn't
income.
have any income. I didn't work for last year. I didn't work for a day. So
So for 2015, you didn't?
I didn't work.
So for them, so all you should need to file is the Form 8843.
I think that's the one that I have. I only filled like
Okay.
my name and some.
That's right, you would fill it out probably in the student
Yeah, like the
section.
first, just the first
Yes.
part and
Right.
the last part. So the other part was like I left it. Like,
There's a Department of Treasury address, it's a Texas address, I can give it afterwards, or if you just search it online, it's like Internal Revenue Service, I think it's like it's a highway address, but it's
Yeah,
like
you
a
say
PO box.
regional highway in
Yeah,
Texas, I think,
but you just mail it to that address.
Yeah.
and
Oh,
that's
okay.
it, yeah.
Yep,
So I have a question. If my income was higher than 4,000,
Mhm.
so do I need to file the 8843 and the 1040 NR?
Yes, so if it was above that, you should file the Form 1040 NR, and you'll report your income and your withholding. And then you'll also complete the Form 8843 and include that with it. And so you would just mail those together. And
Okay, and just another thing, so I'm seeing my W-2, but the
Yep.
address that is there is wrong, like I moved.
so that's fine. You can report to your employer your new address so that in the future if they send something to you, it will go there. But when you file the 1040 NR, you should just put your correct address on there. It doesn't need to match with the W-2 form.
Oh, perfect, thanks.
whatever address the IRS has, based on your tax returns, is where they're gonna be sending you any correspondence. So, you know, if you've moved and that's where you wanna get any kind of correspondence from them, make sure you update it through the return.
Okay, thanks.
Okay. So 8843, so that's the form that, you know, you have to report all your details. So there's a section, depending on whether you're a student or a professor, that you fill out. It's an information form. And the type of information that's usually required is like your university name and address, the type of visa, country that you're a citizen of, because by filing this form, you're essentially saying that you're not a U.S. citizen. And then the days that you were present in the U.S. So it'll have several years, and you report all the dates on that. And then you attach it to the 1040 if you have to file a 1040 NR, if you have taxable income. If you do not have any taxable income, you still have to file this form just to let the IRS know that you're under this visa. So the due date is slightly different. So typically for a 1040 NR, here in the U.S., the filing deadline is April 15th. This year it's April 18th, only because on the 15th it happens to be a public holiday, so they've kind of shifted the filing date. So if you don't have to file a 1040 NR, and all you have to file is the 8843, then the due date for that is June 15th. Okay? Here is an example of again, it's very small. So this section applies if you're a teacher or a trainee. So here are the days that you have to report. So it's basically looking back to the last 6 years, because again, under a teacher, you're exempt 2 out of the 6 years. So those are all the days that you have to report. There's the address details, and other information that you may need to report. If you're a student, you fill out this section. So you only fill one of the sections out, whichever is applicable to you. Okay?
And also with this form, if you have, family members with you, they should also be completing this form, so you complete them separately.
Right.
So they would also fill out one of those forms, and if you mail them, you should mail them in separate envelopes and everything, so they'll have to sign their own 8843 and mail that separately. Just for, yes?
Yep.
Just on that, how do you treat a non-resident with a U.S. dependent, U.S. citizen dependent, a child? Would that be affected, like spouse separately for them as well, or
They, if they're a U.S. citizen,
not the parent is non-resident,
But
but
this-
the child is
if they are, I don't believe.
Is the
it-
child very young? Is the child working or
a
anything
few
like that?
months old? So-
Few months old?
Yeah.
We'll look into that, but basically at that age, they're not going to be working.
I don't think they would file this form.
No, you wouldn't have to file a separate
I'm
form.
just making sure, because I think there's a section where you talk about dependents and things.
Right.
So I'm asking what they effect on either this form or the NR.
So, as a non-resident, you can't claim exemptions for dependents normally. So there would be no impact. However, if you become a resident later on, you could claim an exemption for your child. So that would give you another
$4,000.
exemption on your return, so that would lower your income for the year. So you would claim them on your return in that case when you become a resident.
Are you considered as resident if you're beyond, like, lived there more than 5 years as an international student? Or?
Yes, so once, if you're an F visa student, so once those 5 years have passed, you're no longer exempt from that substantial presence test. So then you would look at that test, the 183-day test, to see if you meet that. And if you meet that 183-day test after, so in that 6th year, then you would be considered a resident. So you would just file a normal 1040 instead of the 1040 NR. And then that's the same if you become a citizen or a green card holder. That's when you would start filing the 1040, the normal one.
And also for the 5 years, just want to emphasize something here. So let's say you came to the U.S., let's say literally 2 days before the calendar year ends. So let's say you came here, maybe December 30th or December 29th. Even though you've only been here like 2 or 3 days of that calendar year, that calendar year actually counts as one of the 5 years. So I just want to make that clear. Yep.
The same applies if you're a J visa?
Yeah, F and J.
Well, J visa is 2 years.
As a student or as a...
Yeah.
If you're a student, then F and J visa, both have 5 years.
Yeah, no, it's weird. I'm a dependent actually.
Oh, okay.
So I'm a J2.
Okay.
So I have to find everything as a J, but I'm not a student per se.
Are you working or anything like that?
Yeah.
Okay, because the rules
I
is...
mean, I'm studying 2 here.
Right.
I'm not like as a student. You know
You're not a
what I mean?
J1, you're a J2.
Yeah, exactly.
I think the rules are slightly different for J2 because you're here as a dependent versus, under a
Yeah.
J1. So I think there are certain differences, and we can go through that maybe at the end of the session.
Okay.
Yep. Any other questions? Okay.
All right, so as Radha mentioned before, the due date for 2015 is April 18th of 2016 if you're filing a tax return. You can file an extension if you would like. There's a form 4868 that you can mail to the IRS that will give you an additional 6 months if you need that. And this year it's till October 17th because the 15th falls on a weekend, so normally it's October 15th. But just remember, if you file an extension, it's only an extension of time to file your return. So if there was a balance due, if you think you will owe money, that should be paid before April 15th. But if you don't owe money, so if you have withheld too much, there will be no penalties or anything like that. You can file the extension, and then you have until October to file your tax return. And even if October is passed, you can still always file your tax return. But if you file after that deadline and there is a balance due, that's when there could be penalties or interest assessed by the IRS. But you should still file the return if you haven't done so.
And usually, one of the penalties that's assessed beyond the extension deadline is the late filing penalty, and that's usually pretty hefty. It can be assessed as much as 25% of whatever your balance due is. So you want to make sure you file your returns as quickly as possible.
And so we mentioned earlier that online there are options available to help you with your return. Usually there's options if your income is less than $62,000 where you can file for free. But as mentioned before, that's usually not available for non-residents. So the Office of Global Services, they have Glacier Tax Prep that they can help you with. And that will walk you through preparing your non-resident return. And you would just have to print out the form and you mail the return. So you can't file online with the non-resident return. You do have to physically mail a signed copy of the return. So you should remember to sign the second page, I believe. You should remember to sign that and mail that to the IRS. And then there's other softwares and programs that you can use for IRS, so your federal return, and then for state tax returns. Glacier, I don't believe, has the state tax return, so I think there's a link that Georgetown has where you could separately go and prepare your state tax return, although I think there is a fee for the state tax returns. But you can use that link to help file your state return. Yes?
I used Terrible Tax to deal with my federal and state.
Okay.
Yeah, it was really easy to
Yep.
deal with.
I mean, especially if your situation is not very complex, TurboTax is actually pretty good. And they electronically file it for you, meaning, you should get, the return should be processed sooner than paper filing in a lot of cases. And if there's any refunds, it'll come back quicker.
I don't think TurboTax offers the non-resident.
Yeah, not for non-residents,
No,
correct.
So that's why our office has purchased the Glacier Tax Prep, is so all of you who need to file non-resident tax returns, TurboTax doesn't offer.
And so the forms should be mailed to the Department of Treasury, and usually if you, on the form 1040NR, there are instructions for where to mail it. And if you search online also, you can just look up the 1040NR instructions, and that will always have the mailing address where you should mail everything.
Yep.
So I earn federal income from 2 different states, one from Massachusetts and one from DC because I'm in Georgetown. So could I use the same software that Georgetown provides to fill out for both states, or is that?
So the state software is separate from the Glacier Tax Prep, so it's a separate service that you would use. So you can use it, but if there's a fee. It's just, I think, they're providing you a link to a state tax prep service that you could use. But you could use that service to prepare both state tax returns.
Okay, what if it's not a state tax return, but just federal income
For just federal tax returns, you can use the Glacier one, yes.
for both institutions, I guess?
Yes, exactly. You would report both the if you got a W-2 from both,
Yeah.
you would report both of those on your one 1040
Yeah.
NR or 1040 form that you have.
So if you're receiving income from different sources,
Yes.
you still have to report it on the one form. You don't report one income on one form and another income on another form. It's just one tax return form is used to report all your income that may be applicable to U.S. taxes. Yeah.
If you have income from 2 different states, you have to file state taxes for both, assuming they're not in the 6 states.
Reciprocal, yeah.
Yes, so if they don't have an agreement and you meet the requirements for that state, so each state has different requirements whether you need to file a return or not, based on income levels. So for some states, you might not need to file a return if you didn't make over a certain amount in that state. But if you look at your Form W-2 that they should provide you, if there are state wages and state withholding reported, you can file a tax return, just depending on the threshold for that state. But normally if you're working in the state and they don't have an agreement, based on the state rules, you may need to file a state return. Another thing is, so all taxpayers need to have an identification number when they file their tax return. So normally if you are working, so have any employment, you do need a social security number that you normally get. So this number is reported on the tax return to identify you. And I believe if you are becoming employed with Georgetown or any program, they should have you fill out the form SS5. And if you present proof of identity and your work authorization, they can help you to get the social security number that you will need to give to your employer. So once you have that, that will be the identification number that you report on your tax return, and it will show up on your Form W-2. There's also, as Radha mentioned earlier, individual taxpayer identification number. And this is usually for people who are unable to work. So if you are filing a 1040 resident return and your spouse, you may be able to claim them. You can file a form W-7 to apply for the taxpayer identification number, and it will give them just a number that can be used on your tax return. It has nothing to do with your, it's not a residence number or anything like that. It's just strictly for tax purposes only.
So you can claim exemptions, basically.
Because you can't file the tax return claiming anyone unless they have either a social security number or a individual taxpayer identification number. And I think also the office can also help you with the W-7 application if you need a W-7.
Just for the W-7, you do need it certified. So usually before you file the return, I think within 5 days of you signing the return, all the documents that are required as proof for the W-7 also needs to be certified. So I think Georgetown offers that service.
So we've been talking about the 1040 NR and the 1040 and what you report. So normally what's reported as taxable is any income that you receive. So if you have activity performed outside of the U.S., it's considered foreign source income. And as a non-resident, you're not taxed on your foreign source income. So if you worked in another country and you earned income in that other country, but you are considered a non-resident in the U.S., you don't need to report that other income in the U.S. However, if you're working in the U.S., so if you're working in Georgetown or anywhere in any state in the U.S., that activity is performed inside the U.S. and would be considered U.S. sourced income, and that is the type of income that you would need to report on your tax return.
Yep.
Quick question. What if you live here, but your source of income is from a foreign country? So I'm kind of working right here, but I'm receiving money from another country.
For your work?
From other country.
Yeah, but for your work here, you're receiving kind of income from. Okay, that will kind of cover a little later because there are some income tax treaty exemptions that may be available. It may depend on your income level and what country you're working or what country you're receiving the income from. Okay.
So also, due to certain treaties, certain income for non-residents can be tax exempt. There's a publication that we have later that lists out all the different treaties for students. So depending on what country you're from and if they have a tax treaty with the U.S., you may be able to exempt certain income that you have. For some countries it's $5,000, for some it's more, for some it's less. But so as a non-resident, if you meet those requirements of the treaty, you can have that income exempt from U.S. tax purposes. Another thing for students is taxable and non-taxable scholarships. So if you're a degree candidate and the scholarship is for tuition, fees, and course-related expenses, that is not considered taxable. However, if you're not in a degree program, then any scholarship would then be considered taxable. And it would get reported to you on your 1042-S. And that's something that the university or whoever is helping with the scholarship would provide to you.
There's a question.
Do we still need to mention that on the form, the scholarship amount?
So if the scholarship is if it is taxable to you?
No, it's tax-free, but do I still need to mention the amount?
If it's tax-free, you don't have to report it.
Okay, I don't have to mention it.
Yep.
If a scholarship is provided by my country, not by the United States, is it possible?
I think scholarships from foreign source are not considered taxable in the U.S. because they're sourced foreign. So it wouldn't be reported.
Provided by my country, the government.
Yeah, so I don't think in that case it would be considered taxable in the U.S.
Not for U.S. purposes.
However, scholarships for things like room and board and travel, those are considered taxable and they'll be reported on the 1042S. And normally when those are reported on the 1042S, there will be withholding on that. So there will be a taxable amount that's shown and the amount of taxes that have been paid on that. And both of those will be reported on your 1040NR when you complete that.
So this is just a grid of the different kind of things you may receive, and whether it is taxable versus not, depending on whether you're a degree candidate or not. And this is available through the IRS website as well, so you don't have to try and write it down.
And then just one last thing, so other incomes besides your employment income, such as interest, dividends, capital gains, could be considered taxable in the U.S. It generally depends on where it's paid from. So if it's a U.S. payer, it's generally considered taxable. However, for non-residents, so if you meet the test to be a non-resident, your U.S. interest from U.S. bank accounts would still be considered tax-free. And then also if it's paid from a foreign country, it wouldn't be considered U.S. source. Yes?
Yeah, so how do you receive your 1042s?
The school, I believe, should be sending those out to you.
They were mailed yesterday, so they should arrive in the next couple days.
And then, so yeah, so if your interest or dividends or anything is paid from a foreign source, so not from U.S. banks or U.S. companies, that is also not considered taxable to you. And normally the rate for taxable income for non-residents for investment type income is 30%, and it's a flat rate. However, depending on which country you're from, there may be a treaty with the U.S. where it allows that actually to only be withheld at a lower tax rate. And so it may only be 15% or 10% or anything different from the 30% that is due. So it just depends on the tax treaty that the country has with the U.S.
And even though like a 30% rate was withheld, when you file your returns, there's a page that you can report that income on, and that pretty much just, and you can report based on looking at the treaty, you can report the rate that it should have been withheld at, and then that way the right tax will be calculated, and if 30% was withheld, and it should have been withheld at 15, you should hopefully get that 15% excess back as refunds.
Yes?
So what if you're eligible for a 1042 NR, so if your income is over 4,000, right? And you get interest from a U.S. bank, do you need to file taxes on that interest?
So,
as a non-resident?
As a non-resident, if you get interest from a U.S. bank, you normally would report it on page 4, but as the tax rate that you would select 0%, so there's no tax on it. So if it's from a U.S. bank, you do normally report it, but then the tax rate for it that you would select is 0%.
Okay.
So there would be no tax that's due on it, which is different than if you got interest from a foreign bank, you wouldn't need to report that at all.
Okay.
Because it's foreign source.
But either way, there is no actual tax due on it.
Okay.
Yes?
So on the form 1099 and 1042, is that for claiming that the income that you're already account is exempt, or is that like for like what is the form for?
The 1042S form?
Yeah, and the 1099.
So a 1099 normally is something that a bank may issue you, like a U.S. bank, to report the interest that you received. So you might get a 1099 that shows $20 of interest. So that's what the financial institution sends to you at the end of the year to report what you've earned. And then based on what's on that form, that's what you report on your tax return. And then,
So if you did receive interest, you're supposed to receive more.
yeah, so if it's less than $10 of interest, they normally wouldn't send it out. But if it's more than that, you normally do receive that form. A lot of times you can find it online on the bank account, on the bank's website. They should have that tax form that you can find. So this is just what the W-2 normally looks like. That reports your income. So in box 1 on the left side, or the right-hand portion, but the top left, That's normally where your employer reports the amount of wages that you've earned during the year. And then the second box to the right of it is the taxes withheld during the year. So that's the taxes that you've paid in during the year. So those are, when you fill out the 1040 NR, you'll report the different boxes, the amount of wages that you've received, and the federal income taxes. And then box 3, 4, 5, and 6 relate to the FICA taxes that we mentioned earlier. So if you see on this form W-2 that you have Social Security or Medicare taxes withheld, but you know that based on what we said that you should not have to pay those, that's how you would know to file those other forms with your return to get that withholding back. And then also down at the bottom is where the state income taxes are normally reported. So your employer would report the amount of wages that you earn to your state and the amount of state taxes that have been withheld. And then this is just a copy of the 1042S. So if you have, taxable scholarship income, that's going to be reported. Normally it's reported on the 1042S. They report the gross income, the tax rate. So if it's not taxable, usually the tax rate is 0. And then if there was any withholding on it, that would be on line 7 where it shows federal tax withheld. So if there are, income reported on the 1042S and withholding, that's what would get reported on your 1040 non-resident tax return. So we kind of mentioned this earlier. The standard deduction that Radha was talking about is normally $6,300 for single people and $12,600 for married. But as we mentioned before, this is only for U.S. residents. So if it's after that 5th year, or if you're a teacher on the J visa, after the 2nd year, that's when you would start claiming this standard deduction. You also have a personal exemption, which we mentioned, of $4,000. And then there's just examples of the different itemized deductions that you can take, which reduce your U.S. taxes. And those are things like contributions to U.S. charities, state income taxes paid, property taxes. So other expenses that you've paid during the year may be a deduction against your U.S. taxes if you're a resident.
And you can only claim either the standard or itemized. You cannot claim both. Right? You're going to take the higher of the two.
And also as a resident, you can claim the deduction for tuition and fees and certain credits. But this is as a resident. And you can also claim a deduction for student loan interest that you paid. So you would normally receive a form 1098 from whoever you paid the student loan interest to, and they'll send you that form showing the amount of student loan interest that you paid during the year. And then as a non-resident, your itemized deductions are limited, so there's less itemized deductions that you can claim, and generally that's only state and local taxes that you've paid. So if you remember back on the W-2, there's the amount of state taxes that you withheld. You can claim that as a deduction. And then also contributions to U.S. charities. Also as a non-resident, you can still claim the deduction for student loan interest, but you cannot claim the deduction for tuition and fees expenses that you've paid. Yes?
So like I wonder like for the W-2 form, so for the 17 is like state income tax. If nothing shows up, like what is the
So is there nothing at all in that section? So that means they didn't report that income to the state normally. But if you were a resident of a state, you still would need to file a state tax return most likely, even though they didn't report it to the state. Also, as I mentioned before, so U.S. source income is generally taxed at 30%, but it can be lower depending on the treaty. And as Radha mentioned before, the standard deduction is not allowed for non-residents. So I mentioned that there's a deduction for student loan interest that you pay. So the first $2,500 of student loan interest that you pay, you can claim as a deduction from your taxable income when you file the Form 1040 NR. However, depending on your income level, you may not be able to claim the entire deduction. So if your modified AGI, which is adjusted gross income, which is basically your wages or any other income that you have. If you are single and it's between $65,000 and $80,000, that's when you start getting limited based on the amount of deduction that you can claim. And then once it's greater than $80,000, you can no longer claim the student loan interest as a deduction. And then it's also limited if there's higher limits if you're filing married, but this wouldn't apply to you if you are a non-resident, so that's only on the resident return where that would get limited. So yes, you should get the Form 1098E from the place where you have the loan interest that you're paying, and you can reach out to them if you haven't received that to see if they're able to provide that to you. And this also isn't available to you if you're claimed on as exemption on another's return, or if you're married filing separate, but that married filing separately would only apply to residents.
So the last section we're going to cover is just the tax treaties, income tax treaties. We're not going to go into too much detail because every country has different rules. But basically these are income tax treaties that US has negotiated with the, I think we have 50, 60 countries, maybe even more. So basically, the income tax treaties, what they allow for is potentially lower amounts being taxed here in the US, or even exemptions for certain income from being taxed in the US. Because if you meet certain requirements based on the treaty, and depending on the country you're from, you could potentially exempt it from being taxed in the US returns. So that's what we refer to, we're referring to when we say the treaties give special treatment to foreign students and scholars. So basically, there's a publication 901. So if you look to that, depending on the country that you're from, then, either as a student or if you're here as a teacher, there are different thresholds. So I think for a student, typically if you're here for 5 years or less, and income I think is usually $5,000. If your income is below that, then it should be exempt from being taxed in the US. Now again, every country has their own rules, so please refer to it for the full details. So if you're claiming a treaty exemption, then you typically report that on page 5 of your Form 1040NR. There's actually a section down the bottom where you say, okay, I'm claiming a treaty benefit. This is the country that I'm claiming the treaty benefit of, and this is the article under which I'm claiming the treaty benefit. So publication 901 actually has detailed tables of what treaty article each of your type of income relates to. So you can always look at that, and if it is, if you want to exempt that from the US and if you qualify for certain criteria, then that's what you would report. So again, as I mentioned, there's time limits and there's dollar amounts. So every country has slightly different rules. So please refer to that. So on the next page, what I also wanted to point out was just because there is an income tax treaty, with the home country that you're coming from, doesn't necessarily mean that your income could be exempt, because you have to meet certain thresholds. And then you also need to look at, okay, what is your US residency? As I mentioned at the beginning of the presentation, if you're usually a US citizen or a resident, then there's not very much, you can claim exemption from using the treaty. Because under that filing status, you have to report your worldwide income. So, you have to look at different things to see whether you can even use the treaty. So, your US residency, and then who is the payer of your money? So as Kyle mentioned before, some items like, maybe capital gains. If your payer is the US, then you may not be able to treaty exempt it. So you have to look at various factors to figure out whether you can, in fact, claim the treaty. Again, time and amount does make a difference in terms of what you can and you cannot claim. So on the next slide, we are listing a set of publications. These are actually very useful, so you may want to write this down. So publication 17, that just talks about your federal income tax, like the Form 1040, and all the details around that. You'll talk about exemptions, deductions, all the various things. Now 519 is also a tandem to that. So again, you can look at that in more detail. It'll give you a lot more information about the various schedules, the types of income you have to report, different deductions and things like that. So tax treaties, 901, that's also going to be very useful. You can refer to that, and it's got, as I mentioned, details on if you're a student versus a non-student and the countries that you're from. And 970 gives you the details about the benefits for education, the different credits and what you can typically claim and things along those lines. And then the last one is just the link to the IRS website that has all the different forms and publications. Usually, if you try and Google something, you should come up with the links, and there should be at least one link in there with the IRS, link to it. So that's also another way you can look up things if you're not sure. Okay, and that concludes our presentation. Do you guys have any questions? Yep.
So some of us were able to file the taxes even though we're non-residents to pay the tax.
Okay.
So would that have any impact? Because even if you're non-residents, there's an option where you could go as non-resident and file.
You were able to file it on a 1040-NR form?
So TurboTax has like a format where we go as a non-resident as an employee.
Okay.
And then file it. So there was no problem with that tax impact what should we were filing again.
As long as it was the 1040-NR,
Yeah.
you should be fine. But you do need to make sure if you're a non-resident that you're also submitting that
There'll be
88.
an option whether to choose resident or non-resident. So we go with non-resident.
And did it also have the form 8843?
So TurboTax doesn't directly give you which form, just like the question and answer.
That's right, but at the end of it, did it ask you to fill in something along the lines of what Form 8843 requires, like university name and things like that?
Yeah, probably, yes.
I would double check just to
Yeah.
make sure that you included the 8843 with it if you filed it,
Okay.
because that does need to be filed even if you submitted the tax return.
So it says anyway if it's not filed, how can we make sure it's filed again?
You probably just download the Form 8843.
Okay, we are
complete, complete that form.
Oh,
If you've already filed the actual tax return, and TurboTax did ask you under not 1040-NR, then you may be okay for income tax purposes. But do go in and print out the Form 8843, complete that and send that. Yeah?
Yes, as a US non-resident, do we fill out if required W8 or W9?
I think it's the W8.
W8, because that's the one that's to do with the foreign.
Don't fill out the 9.
No, you only do one or the other.
Yep.
Hi. Okay. That's right. Yep. Yep. Right.